It's Quant Trade Edge, and today we had another great example of the flagship Forex trade. It happened in several markets, but I'll go over the one that happened in the NASDAQ. That was the cleanest, and it was one of the ones we were watching today. So this is a daily chart of the NASDAQ, and coming into today, which is this big ugly red candle, we had this day that had a higher high and a higher low to the previous bar. And it had a red body, which made it a good candle from which to set up a Forex trade. That just means that if we were to break through, we expect to get follow through. Another thing that's a bit of a nuance here, I haven't really done much of a class on this, but this is the 2-period rate of change. And yesterday's setup bar, this one right here, was the first day in which the 2P ROC went down. We call that an ROC flip. And then usually the day after that is ripe for a big move. So those aspects of it lined up, but even if you don't look at the 2-period rate of change, conceptually what I want you to see here is down momentum, bouncing, and then losing momentum. This barely got a little higher. This got a little bit higher, both with red candles, as it was running into resistance. Now, the way we get multiples of our risk is we wait for that low to break. Once that low breaks, we know that the daily has now switched from an uptrend to a downtrend, because this bar, having had a higher low and a higher high, is an up bar. This bar, having a higher low and a higher high, is also an up bar. This bar, having a higher high and a higher low, is also an up bar. So off of this low, we were in an uptrend. As soon as we take out that low, and given that this high was not above the previous bar, we know that the daily is going to switch to a downtrend, because unless this were to go and do an outside, take out the bottom and then take out the top, which is rare, it happens maybe 10 or less than 10% of the time, then we know that this is going to be a down bar. So we're getting onto the first down bar after a series of up bars. That's the edge that we have. Now, dropping it down to a 5-minute chart, you can see that it broke below the previous day's low at 8 a.m., which is 30 minutes before the market opened. And then it came down, and we had this little push up here. None of this is our entry, but now this is 8:30. This is when the market opened, and we got an impulse down for 20 minutes straight, 4 bars. Now this is the pattern that we look for to enter, and I'm blowing this up as big as I can to show you the mechanics of it, because it is completely objective. It's not this looked like this or that looked that way, I felt it was bearish and I sold it. You could program a computer to do this. So once we broke below the previous day low, we're looking for a 2-legged pullback, an ABC. So from the open, these are down bars. This is technically an outside bar, so we'll just start from the swing high, down, down, down. Now this is an up bar, which is strictly defined as higher low, higher high. This is an up bar, same definition. This is a down bar, lower low, lower high. This low is 1350 versus 17, so 4.25 points lower. Now again, higher low, higher high. This is an up bar, this is an up bar, and this is an up bar. So this is how you can see the mechanics of how we count the waves to know that this is an ABC pattern. And then I'll shrink it so you can see the context again. The context is we broke below the previous day's low, which is this blue horizontal line, came back up, came back down, and this is the first ABC. And this bar here, the entry bar, the trigger bar, is 915 to 920. The trigger would be on a break below this bar, and the stop would be a tick above that bar. So the risk on this trade is the size of this bar, which is about 63.5 points. That's our risk. Now zooming it back into the context of the rest of the day, shorting here and going down to here is about 6 times your risk. And we typically look for 4 times our risk, and 4 times I believe was around 180, 179 and change. So basically around 182, 176. So by this bar, by 10:30, 10:35, which is when Europe closes, we got 4 times our risk. Actually, that doesn't look 4 times as big. Let me do the math again here. This is 63.5, so that would be 127, 254. 254 points below 433.25. Yeah, no, it's 179. This is 4 times the risk. I seem to remember that number from the trade. And then given that this was close to European closing time, I did go ahead and take profit because, one of the things that could happen is you could get a change of trend around European close. And actually, come to think of it, I actually took profit at the 1.272. I was watching several things, and where is it? From here to here. So I actually took profits in here, a little bit ahead of the 4x target. And that was just because I was watching many positions, and I wanted to stop paying attention to this one. But we did highlight this as the potential for the trade. And, again, everything's great in hindsight, but this is our live Discord. And at 8:08 a.m., I mentioned ES is breaking lower. And 8:19 a.m., which again is before the open, 8:19 would have been during this this here, during this first breach of the previous day low. Basically said ES and NQ could be on 4x sells, broke PDL, previous day low, now need to get a 5-minute ABC. And then these are some of the other things I was looking at, GBP to the long side, Euro to the long side, GC and SI to the short side. These are all different trades that we had. And here, again at 8:21, ES, NQ looking for 4x shorts, ABCs on 5. That's about as clear as it gets to get that message over here. And then, an hour later, if you were paying attention, you got this ABC on the 5-minute and you made 4 times your risk. So this is the type of trading we look at in our Discord. If you're interested, I'll put a link in the description to this video.